What if I told you the biggest enemy in trading isn't the market? It's not inflation. It's not the Federal Reserve. It's not market makers. And it's not some secret algorithm working against you. The biggest enemy in trading is your own brain. Every day, millions of traders sit down in front of their screens believing they're making rational decisions. They study charts. They watch the news. They analyze price action. They develop strategies. But beneath all of that, something much more powerful is happening. A hidden biological process, one that has destroyed more trading accounts than any market crash ever could. And the worst part? Most traders don't even realize it's happening, because the battle isn't taking place on the screen. It's taking place inside your head. Every time you open a chart, your brain begins a process that scientists have spent decades studying. A chemical called dopamine is released. Most people think dopamine is the chemical of pleasure, but that's not actually true. Dopamine is the chemical of anticipation. It is what drives you to seek rewards, to chase outcomes, to keep going. And that's where things become dangerous, because the strongest dopamine responses don't come from predictable rewards. They come from unpredictable ones. Imagine a vending machine. You insert a coin. You get a snack. Simple, predictable. Now imagine a slot machine. Sometimes you win. Most of the time you lose. But you never know what will happen next. And that uncertainty creates an incredibly powerful dopamine response. The human brain becomes fascinated by randomness, obsessed with possibility, addicted to anticipation. And that's exactly what trading provides. Every trade is a mystery. Every candle is a question mark. Every position contains the possibility of reward. Your brain loves that. Sometimes a little too much. Sometimes you win, sometimes you lose. But your brain doesn't know what's coming next. And that's exactly what makes it so powerful. The uncertainty keeps pulling you back, again and again and again. Most traders believe they're chasing profits, but often they're chasing a feeling. The excitement before a trade, the anticipation of a breakout, the possibility that this trade could change everything. At first, the goal is simple: financial freedom, a better future, more control over your life. And trading seems like the perfect vehicle to get there. But something strange begins to happen. The focus slowly shifts from making money to taking action, checking charts, looking for setups, refreshing the screen, watching every candle move. The trader begins believing they're searching for opportunities, but often they're searching for stimulation. The market becomes entertainment, a source of emotional highs and lows. And once that happens, good decision-making begins to disappear, because decisions are no longer driven by logic. They're driven by emotion, and emotions are expensive. Most beginners believe losses are what destroy traders. Losses certainly hurt, but surprisingly, wins can be even more dangerous. Imagine a trader who has just won 5 trades in a row. Confidence starts growing. The strategy appears flawless. Every decision seems correct. Everything feels easy. The trader begins feeling special, different, smarter than everyone else. Position sizes increase. Risk management becomes optional. Rules become flexible. And that's when the danger begins, because markets have a way of punishing certainty. The moment someone believes they have mastered the market often reminds them otherwise. One bad trade, one unexpected event, one emotional decision, and weeks of profits disappear. Not because the trader lacked intelligence, not because the strategy suddenly stopped working, but because confidence quietly transformed into overconfidence. And overconfidence is one of the most expensive emotions in finance. The market doesn't care how confident you feel. It doesn't care how many winning trades you've had. It doesn't care how certain you are. The market simply does what it does. And reality eventually catches up with everyone. Now we arrive at perhaps the most destructive behavior in trading. Every experienced trader knows this feeling, and many never fully recover from it. Revenge trading. You take a loss, then another, and suddenly you're staring at numbers you never wanted to see. Your account balance is smaller than it was an hour ago. Your confidence is gone. Your frustration is growing. And something begins to change inside your mind. The objective is no longer making money. The objective becomes getting your money back, fast, immediately, no matter what. Research has shown that financial losses activate many of the same regions associated with physical pain. In other words, losing money literally hurts, more than most people realize. And when humans experience pain, they naturally seek relief. That is why revenge trading feels so tempting. A new trade promises recovery, a second chance, a way to make everything feel normal again. But emotional trading rarely solves emotional pain. Instead, it usually creates more of it. Small losses become large losses become disasters, and many trading accounts never recover, not because the market was impossible, not because success was impossible, but because emotion took control at exactly the wrong moment. As if human psychology wasn't challenging enough, modern traders face another obstacle, one that follows them everywhere, in their pocket, on their desk, and on their phone. Social media. Every day, traders are exposed to carefully selected highlights, winning trades, luxury lifestyles, screenshots showing enormous profits, success displayed like a trophy. What you don't see are the losses, the mistakes, the sleepless nights, the blown accounts, the years of failure that often came before the success. Social media creates a distorted version of reality, and that distortion fuels one of the most powerful emotions in trading, FOMO, the fear of missing out. Suddenly, every opportunity feels urgent. Every rally feels like the last chance. Every trade feels necessary. And traders begin abandoning their plans, not because the strategy failed, but because somebody else's success made them impatient. Now, here's something interesting. Professional traders are not immune to fear. They are not immune to greed. They are not emotionless robots. The difference is that they understand something most beginners overlook. They do not trust themselves, at least not completely. Instead, they trust systems, checklists, risk limits, position sizing rules, trading journals, processes. Because professionals know the greatest threat isn't the market. The greatest threat is the emotional human being sitting in front of the screen, themselves. That realization changes everything. The truth is that most trading failures are not caused by bad strategies. They're caused by human psychology. Fear, greed, impatience, ego, overconfidence, revenge, FOMO. These invisible forces quietly influence decisions every single day. Success in trading is not about predicting the future. It is not about finding the perfect indicator. It is not about discovering some secret strategy hidden from everyone else. Success begins with self-awareness, with understanding how your own brain works. Because the market is not your biggest opponent. The economy is not your biggest opponent. Other traders are not your biggest opponent. Your biggest opponent has been with you the entire time, looking back at you from the mirror. And the moment you understand that, you stop trading like a gambler and start thinking like a professional.